Welcome to It's the Economy. Microfinance companies got a warning from the Reserve Bank Deputy Governor Rajeshwar Rao. Speaking at the CII's NBFC conference last week, Rao said, and I quote, "It has been observed that while the lenders were quick to pass on the increased costs to borrowers, they have been reluctant to pass on the benefits envisaged under the new framework." He means MFI framework. Some of the MFIs have increased their margins disproportionately in the new regime. We are not oblivious to the misuse of the freedom provided to the microfinance sector, and irresponsible practices would compel us to act. End of quote. Today, I have with me the Microfinance Institution Network, their SRO, so to speak, MFIN, the CEO, Professor Alok Mishra. I also have with me two microfinance companies, Shalabh Saxena, the MD at Spandana Sphurti, and Sadaf Saeed, CEO at Muthoot Microfin. Gentlemen, thank you very much indeed for your time. Professor Mishra, you gave me chapter and verse data, so the question is first to you. Do you disagree that microfinance companies have been overcharging?
Well, Lata, I would say thank you for having me here, and I would give, because I think I base my opinion on data, and indulge me with some time, because if you see, the deregulation of the sector of NBFC MFIs came in April 2022, and it was only 35% of the sector, and even now it is 38% of the sectors. So at that time, before the interest rate deregulation, the NBFC MFIs, which comprise 38% of the sector now, their interest rates were maximum was capped at 21.72. And if I look at the current rates as of end December, I'm talking about top 17 NBFC MFI players, which make up for 91% of the market. The weighted average cost of lending is 23.94, I think, to be precise, 23.94. So you can say roughly it has gone up by 200 basis points. But then there are two things which I want to illustrate, which will put the things in context. Number one is that the credit cost in last 3 years of all these players put together has been 11.5%. And if you take 4 years, it has gone up to 13.6%. So some credit cost of the COVID times is also there, plus the hike in cost of funds. And the second important point is, when we talk about NBFC MFI rates, we also have to take into account the other comparable players, whether it is banks, small finance banks, or NBFCs. And these are, and every model has, every legal form has this different cost structure and all that. But if you compare the rates, I feel the rates are well comparable. And I don't see any cause of alarm in case of lending rates, at least of 91% of the sector.
Okay. No, it is possible that they are not referring to the top 17. And the two people I have here are in the top 17, but I have to ask their opinion. Mr. Saxena, what's your sense? Is the competition from banks also have cheaper cost of funds, but they are usually located in more urban areas. And so because of the feet on the ground, are they charging more than you, or are you charging more than them?
Yeah, so good morning, Lata. So I'll not get into the specifics of us versus them or whatever, but broadly speaking, and I'll just pick up from where Alok left. The cost of a bank, the cost structure of a bank is very different from NBFC MFI as we are. And obviously, there's a huge difference between the two. The interest rates that are being charged by the bank, and the banks have in turn, their subsidiaries which operate like in the deep rural India, like a NBFC MFI only. Their the lending rates are almost at par or thereabouts. So, so this, and hence this debate will have to be looked at in context, number one. Number two, if I may just add that this business has a slightly high operational cost because of it is physical in nature. You need a lot of people out there in the field because you're dealing with a segment. All of our customers, 100% of our customers are women. They are not financially evolved, while they are financially mature, but not financially evolved. So a lot of training has to go, a lot of awareness has to go into that. And hence we need to deploy a lot of staff in terms of running an end-to-end process. So in that context, I would say that, we are reasonably priced as a group of NBFC MFIs, as Alok mentioned. At the same time, we are cognizant of whatever is being said, and we keep on reviewing our interest rates as and when periodically
No,
to
no, that is
ensure that
important.
we don't really tip over the direction which the RBI has given.
Yeah. Now, to be fair, the Reserve Bank's cap even at that time was almost 3 times the average base rate of the top 5 banks. I mean, 2.75 times. So they had allowed, triple the cost in terms of cost of funds because you'll have a long distance to cover. But Mr. Saeed, what has been your experience? Would you say that the top 17 may be perhaps falling in line, but there will be pockets of excesses? I mean, I don't believe the Reserve Bank governor deputy governor would have said something without basis.
Good morning, Lataji. Thank you for having me here. I think it's important to understand, I think while Alok sir brings the perspective of the industry and from an individual entity perspective, each company has its own cost structure. So even when the regulations were there where lending rate of the top 5 commercial banks was taken into consideration with 2.75 as the multiple over that, I think the direct proportion of lending of these banks were not equal to all lenders. So I think you have to look at from that perspective. Also, I think you have to look at from a perspective of the risk and the credit cost that is there. Every bank has a different, or every lender has a different credit cost structure depending upon the area where they're operating in. And when the harmonization of regulation came in, when RBI came in, it came in with the understanding that the pricing would be done taking into consideration the cost structure, the risk that the entity face, and the kind of borrowing rates that they have. So I think from that perspective, if you look at industry, the cost has been passed on to the borrower, but not in proportion to the base rate that it has increased. So overall, the cost has increased by 250 bips. RBI has increased the rates, but I think NBFC industry has passed on around 200 bips. But if you ask us individually as an organization, Muthoot Microfinance just recently reduced rates by 55 bips. And that is coming out of our better experience on the portfolio. The credit costs have come down, and hence there is a reduction in the rates which is getting passed on. And as the interest rate cycle turns, definitely there would be more opportunities to pass on that benefit to the borrower. So I think the most important aspect which Alok sir said is I agree with him. If you look at the weighted average rate of the industry today, where 90% of the lenders are following in that top 17 bracket, is much lower than what was considered to be a kosher rate at that earlier point of time, which was at around 26%. Today, the weighted average is, as Mr. Alok said, 23.9%.
Okay. Oh, well, I'm just looking at your third quarter numbers, which are in front of me. And Spandana Sphurti's profit is up almost 71%. And likewise, your ROA is also up very sharply from 4.5 to 5.5. Likewise, for Muthoot, all the operating ratios are much higher. And therefore, there can be a bit of a fear. But let me get to other issues. I just want a bit of a quick sector outlook. First, Mr. Mishra, very quickly, have you approached the Reserve Bank with this data?
No, Reserve Bank, we have what you can say structured feedback mechanism, wherein as an SRO, we give quarterly data on interest rates and various other factors. This is a part of a structured reporting format, which we give to Reserve Bank of India. As of September, it has been given. As of December, it is due and it will be sent. So it goes on periodically, every quarter it is sent.
Regardless of the speeches. Okay. How is business, Mr. Saxena? There is a lot of talk about rural slowdown. Your numbers actually both in terms of NPAs, and that holds for Muthoot also, in terms of asset quality and profitability are good. This slowdown is not hurting microfinance companies?
Yeah, so before I respond to your question, let me just answer that those percentage increases that you alluded to.
Yes.
The context, a YOY comparison has to be looked at when last year we wrote off a significant portfolio because of which was an outcome of the COVID losses. So hence you see these elevated percentages. But broadly speaking, on a steady state basis, Lata, we believe that 25%, anywhere between 20 to 25% growth rate for Spandana over the next 3 years is something that we are comfortable with. To your question on the slowdown or alleged slowdown in the rural economy, I would I would give two answers. One, immediately after the COVID, there was a pent-up demand which kind of, led to a slightly increased disbursals. But over the past 4 to 5 quarters, what we've experienced is a much more mature growth and a much more mature demand which is coming from the segment that we deal with. Apart from this, because we deal with the bottom of the pyramid, we have our segment is very much employed into doing income generating loans, and hence the business that they are engaged in leads us to conclude that the demand is fairly mature and it's not a blip, as we say. So the demand is pretty stable, if I were to speak about this, and it's a much more mature demand now with a lot of focus on portfolio quality as well.
Okay. Well, a similar question to you, Mr. Saeed. What's the asset quality? You've done brilliantly well in the third quarter. Your profits have doubled. Is there no sign of slowdown? We just spoke to M&M, and there the total tractor sales have actually fallen for the entire industry, not specifically for M&M. So there is a slowdown in tractor consumption. That's why I'm putting this question to you as well. How is asset quality likely to shape up? How's loan demand likely to shape up?
Lataji, if you put that in context in terms of rural economy and the kind of borrower that we are catering to small entrepreneurs, like somebody who's engaged in a kirana shop or something. So a person who used to borrow 50,000 rupees earlier to stock her kirana shop, with the inflation in prices and all that, she might need another 50,000 or 60,000, 70,000 to level that level of stock. So that's how the demand is coming in. And most of the people who have after COVID come back to their homes have also started small businesses. So that's where the demand is coming from. And if you look at the industry has not only grown by increasing the ticket size to the borrower. Overall, if you look at almost 1 crore additional borrowers have been added up. So today the industry caters to around 7.5 crores of household. So the outreach of the industry is increasing rapidly. If you look at Muthoot Microfinance, we have added almost 500 branches in last 2 financial year. Last year we have added around 250 branches, and this year already we have added around 260 branches. And we have acquired around 1.2 million customers, new customers. So the growth is coming from acquisition of new customer and distribution of branches. And that is also the fresh portfolio that we are lending is helping us overcome the COVID hurdles which were there, and all the bad loans which were there in COVID have been written off. So that's how the improvement in the asset quality is coming.
I'm sorry I'm hurrying you because I have been told I'm out of time. Extremely sorry, but that answers a lot of worries on one, whether the microfinance companies are overcharging, and the other, whether the rural slowdown is hurting. It looks like a no on both counts. Maybe the matter will reach Reserve Bank. Thank you very much for joining us on this special discussion. We wrap up on Bazaar, but do stay tuned. Very important news coming up. Supreme Court hearing the electoral bonds case, and we should be having a judgment after the break.